Let's look at the Russell. Russell definitely down almost a percentage point. So could this, as T.O. said, could this mean that we're going to dump? I don't know. I guess you'd have to take out this level first, similar to this. But this definitely doesn't bode well for the markets. And there's a reason why this is happening, and it's called the dollar. The dollar is surging along with yields. That is not good. Even though the reports came back that the CPI was as expected, there was a little bit of inflation in there, and now investors are waiting for PPI, which is tomorrow. If this is elevated, now remember, we've been collecting tariff money. I alerted this yesterday. We've been collecting tariff money. So if we've been collecting tariff money, that means the producers probably have been paying a little bit more for inventory, for product, for manufacturing. If that's true, then that means this is going to be a little higher. If the PPI is hot, that means what the consumers will end up paying will be more expensive. That's called inflation. So if after the administration has been bringing down inflation coming down, and then we see a little bit of an uptick, I don't think it's much to worry about, although what do I know? But the markets will react to that. How do the markets react to that? The dollar, yields, and the VIX. I'll talk about the VIX in a minute. So if yields go up, dollars go up, VIX go up. The dollar goes up, yields go up, and the VIX go up. And the Russell continues to drop, you will have a reversal and potentially a correction in the market. So tomorrow's a very important day. When tomorrow is a very important day, what happens today? Light volume. They're not going to step in front of it. Plus, you got bank earnings. So JP Morgan was pretty good report, didn't really move much. So banks are getting some decent earnings reports, but the market isn't thrilled because they're still a little concerned. They're less concerned about earnings from the last quarter than they are about what is Powell going to do. Listen to this. They're less concerned about the current earnings season, starting with banks. They're less concerned with that, more concerned about the impact that tariffs will have if there's inflation that comes back into the conversation and the dollar goes up, this goes up. Then you might see a scenario where metals go down, Bitcoin comes down, and equities come down. If they're all coming down together, that means the beginning of a potential correction. So if that's the case, hands off the markets today. Let's just see what happens tomorrow. Do you understand? They're less concerned, they're less interested in earnings and more interested because if it's true that the I word is back in the picture, that tariffs have somehow caused producers to pay more, which will affect how much they charge consumers, which affects the inflation rate. And if that goes up, that is going to sort of signal to Powell, you know what, now is not the time for a rate cut. And now he could say, listen, I know Trump wants me to drop the rates. I know they're high. I know they're aiming for 5.0, but you know what? We just got a report that shows that the tariff policy is pushing prices higher now for the first time. And if inflation is going higher, those metrics don't work for me to lower interest rates. And if that's the conversation, that takes the September, what did I say? I didn't say 5.0. That takes the September cuts conversation, and all of a sudden you're going to see investors go, I don't think so. The biggest problem with not cutting in September is that the September potential rate cut is already priced in to our markets. So add all that up, and now you see that we're in a very tenuous position, and that's why I don't have a whole lot of trades on. I'm kind of, finagling and managing some trades here and there, but we could be in for something very significant. Now I've got some shorts on. They're not doing that well because the market is floating higher, but I am prepared. I am seeing that the VIX is starting to sort of ramp up a little bit, isn't it? So we're going to take a look at the VIX in a minute. Let's go through the rest. Dollar up, gold down. Okay, responding. I got it. But if inflation pushes it even higher, then you might see oil spike. Then you'll see sort of energy and oil and the dollar going together. And then metals will sell off. As I said yesterday, might make sense for us to put on a hedge against this dollar going even higher and do some short-term silver puts. Now, I've got long-term puts because I think eventually the dollar will come down into August and then silver will go through the roof. But short-term, we might want to put on something. This is the best way to play the dollar. Wouldn't you agree? Silver puts are cheap. This goes up, silver down. We could capitalize on it, or GDX. But I think silver makes more sense. Bitcoin, big move in Bitcoin the other day. It's pulling back a little bit today. Some profit taking. We'll have to see what happens with it. Oil down a little bit today. Again, we have to watch the dollar. If the dollar really surges on inflation data, then you'll see oil go up with it. So does that mean we should maybe put a little bit of U.S. calls in play for that? Little silver puts in play for that. So these are great ways to play the dollar going up. Dollar goes up, inflation goes up, yields go up. Guess what's going down? TLT. So maybe we put some puts on TLT. So I alerted this yesterday. So we're going to look at all three of these potential trades. I wouldn't put all of them on, but there's a way to play that.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.